Morning traders, welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today and welcome to the Bookmap Discord Trader Lab community. This stream is specifically being done in real time in the Bookmap Discord Trader Lab, and YouTube will be posted after the fact. One moment. Make sure my audio is okay. Are you still hearing me in Discord? Do I still have audio? Can I get a yes? Okay, great. Thanks, guys. All right, thanks, everyone. This stream's about integrating Bookmap order flow tools with auction market theory using structured trades in the intraday developing time frame. It's based on structured trades, and those of you who are in the Trader Lab, appreciate your participation. If you're visiting in YouTube after the fact, there is a link down there if you want to visit the Trader Lab community. It's a group of like-minded traders who've come together to leverage their collective experience. This is based on the business of trading, building trade plans, and only interacting with the other participants in the market when you have a statistical edge. Everybody does their own thing in the sense there isn't a right way to trade in the sense or one way, but the one way that does work, and that I can assure you, if you do the work, is only interacting when you have a statistical edge. Now, why would I even make that statement in a business where there can be no guarantees? I can make the statement because there's a proven business model, and that's gaming. So casino operations are based on structured games, if you will, so structured trades are really the same as structured games. Casinos are in a random environment. They don't control the cards coming out of the deck or how gamblers play the cards. We don't control what the other participants in the market do. The only thing we can control is what we do. And that, of course, is going to be challenging because of our emotions and our primal wiring to avoid uncertainty, to avoid risk. Yet the only way to extract that edge is to actually embrace risk when the edge favors you. Seems simple, but it's not. And that's not because you can't learn to do it or even build a plan. It's because executing it is going to be potentially your major challenge, assuming you do the work. And you can learn these elements and potentially overcome the issues that we all face as developing traders in the Trader Lab. And you all have an open invitation. And remember, there's no cost. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Remember, this is not a trade calling room, but this is based on structured trades that you can reverse engineer and vet for yourself. Just as a reminder, I have asked traders in the Trader Lab to post what they would do, what they would say to their developing selves if they could go back in a time machine. What advice would you give that developing trader? You. It's very important because what we think this business is when we come into it, our fantasy is really quite different than what it actually is. And most developing retail traders, and I'd say all of them, have no idea what they're getting into. They have a fantasy. Well, Trader Lab's here to help you differentiate between the fantasy and reality of trading. But if you, a Trader Lab participant, could go back and speak to yourself, what would you recommend? What would be the most important things? Please post that in Trader Lab. Help us all understand better the same issues, but what would you prioritize if you could put your arm around that developing newbie trader? What would you say? Please do that if you haven't already. And to those of you who have, thank you so much. Now, we have retail sales this morning, 7:30 Central Time. I think the market almost fell asleep on it. Very unusual. It's a major report, which came out stronger. However, we have FOMC tomorrow. And if you have kept an eye on things, you'll notice that we are in a higher time frame bull market. Wonderful. But the market's been going up, and the longs have not been challenged. So if you're sitting long at new all-time highs, what might you anticipate if you're a trader. So you're long, and you know if you're a day trader that the market is long. Now, when the market gets one-sided, what tends to happen is the side where the fuel or the stops, which are trailing up behind, at some point, the weak side, which is the longs, believe it or not, when I say the weak side, the trend is up. So we can say in a higher time frame, that's a strong side. But in the intraday time frame, the weak side are the weak retail traders like us who are trailing behind the market. And as we keep coming up, stops trail under, for example, yesterday's low. So what is the possibility ahead of FOMC? What might we anticipate? Now, we can't predict anything, but in trading, it's really anticipation. And then if you anticipate something and the condition confirms what you anticipate, and condition means context or behavior, then you would have a plan to take advantage if that behavior shows up with structured trades that have a statistical edge, and you're still going to take stops because we all do. It's called overhead and cost of production, so you have to get over it. I know you don't like it. I understand. Who does? What's there to like about paying a bill? But the casinos do really well by paying the gamblers. It's not a personal failure for them, or gee, they don't have an opinion on the outcome of the next hand because they know it's random. But what do? Are you behaving like a business, or are you an emotionally attached individual who's thrashing, chasing the market around, predicting what's going to happen, needing to be right? All the things that are part of all of us. Are you doing that? So let's go take a look. And please post what you would tell yourself. Go back in that time machine, and let's go take a look at the condition of the market. Now, if you've been following the stream, and I recommend everybody take a look at these things after the fact, naturally. Since this is not being streamed live in YouTube, you can review it later. Let's start with the ETH. This is pre-RTH Open. This is part of the analysis that takes place to prepare for the day. If you're not looking at the pieces and thinking about the condition of the market, then you're missing a lot. If you just show up and play a video game, I would suggest that's probably not going to be sustainable. And if you're doing that, how's that working out for you? This is the highest volume from yesterday's RTH. Consider this naked volume point of control. In the market profile world, a point of control is just high volume, the highest volume from yesterday's RTH. And if we are above that price, it can mean that it's too low. Yesterday's new all-time high. So yesterday's high, settlement, but here's the key piece, ETH low. So the ETH low said too low. We tested it, and then off we went. And here's the ETH high. So going north, right? So right here, we're looking at it and going, okay, it's going to open, it's going to go higher. Wonderful. Okay. And look where we opened. RTH open, gap higher. So we're opening, and I'm going to give you some statistics. You have to bet these for yourself. I'm going to give you some something else, something called context. Now, the ETH inventory is probably about 50% long. So the possibility is, and the market's long, don't forget from yesterday. So the possibility is we may rebalance, and that means counter rotate. That's one piece. The other part is we're opening out of range, so in a gap, and the market, that means the market is somewhat out of balance. Remember, FOMC tomorrow. So what then? Do we open and go to the moon, take out the ETH high, strap in, off we go? Or pre-FOMC, do we get the longs taking profits ahead of FOMC? The weak longs. Now, either one, right? So is the market responsive? So what we're going to look for is we open higher, we might get some buyers. Okay. But what happens if we come back inside? What happens if we want to get short for long liquidation? Remember, the longs have not been abused, and they certainly deserve it, right? So the possibility is if we get what's called responsive selling, and there's a difference. Responsive selling is long liquidation in this condition, not a key reversal event yet. It can be, it might be, so far, not so much. So what does it mean? If we get that selling, we want to fade the gap back into yesterday's range, which would be back in here. And then we possibly can go through this, what's called the value area, take out the ETH low, and if we get below here, and this is a target, coming back to the fair price, because ETH low, fair price, and if we get below there, where might we go? Here. That's the plan so far, and we're sticking to it, unless you have a different plan. And that's, now, statistics. Write these down, you have to vet them. This is kind of, and the reason I'm doing this is, the market is random. The process needs to be consistent, vetted. You need to know what you anticipate. You cannot predict what will happen. Anytime a trader says to me, it's going to do this, it's going to do that, they've closed off the other possibilities. You must be very careful how you even yourself talk. Because when you are, there's another part of you that's listening. I call that hide. And hides this subliminal, primal, wired part of yourself. But when you talk to yourself, who's listening? Well, you are, and so is your unconscious side of you. So when you say it's going to do something, you're looking for it. How about saying instead, it might do this, it might do that. If it does this, I do that. If it changes, then I do something else or I do nothing. Would that be better? Those are conditional statements, and conditional statements are the way trading systems or any system is built. I build trading systems, so I use a conditional process. And the idea is to kind of shift. It's like a train. A condition exists. You turn the switch, you're on a different track. So it's a logical track. And that sets up a set of events that if they all line up, off you go. So we're opening higher outside of range. And here's some statistics. They are available to all of you in Trader Lab if you're listening to this on YouTube after the fact. There's about a 98% probability we take out the first hour's high or low. Also, approximately a 98% probability to take the ETH high or low. Approximately an 81% probability to take out the overnight volume point of control. A 67% probability to take out the previous RTH high or low. And let's see, previous point of control, only 38%. Now, what you're seeing here is as the statistics are going lower in the direction that the context suggests. This is a big issue for many developing traders because they always look at things mechanically. And I understand that we all have, so don't worry about it. The thing about it is the piece that's number one in all this is the condition of the market. The condition of the market is long. That means everybody's long to the gills and there's stops under yesterday's low. Okay? So if the statistics suggest up, but the context suggests down, you got to prioritize the context, not the statistics. Now, there's another piece. If we fall back into yesterday's range, what does it mean? Fade. That means short. Watch for the rejection of the previous value area in the previous close. Is the value area holding? Value area starts with this, value area high. If we get in there, come below here, come out the bottom, it is south until it changes. So the market has rejected that gap higher. There's a high probability of trading through the value area, and especially if it's narrow, and the market has rejected the new interpretation of value. Potential to turn into an outside day. Why? The market has broke out of balance and subsequently rejected it. This suggests position traders feel new sentiments are unwarranted, so we revert to the mean. And by the way, the mean in a higher time frame is here. Doesn't mean we're going to get there today, now or ever, never. Remember, these statistics and this information is not based, it's based generically. The goal of this trade here is to take out the weak longs, and then if we exhaust, to possibly come back inside. And it's not a recommendation. So we can come back in after we get the weak longs out. We'll see. Okay? So if you have questions and you're in Trader Lab, post them. If you're visiting in YouTube, you can access this, the live stream using the link in the bottom of YouTube. You do have to confirm your Discord username so we know you're not spam, and then you can visit the community, and it's a serious community about the business of trading. So what do we know? ETH high, RTH open, overall time high, going to the moon, except FOMC. So what do we look for? For me, short. And where? There's the joy. How we doing in Trader Lab? Okay, so now let's look at the first trades here. Now, there's a number of different trades that's set up. None of these are mechanical. That's the whole point. Developing traders are fixated on plug and play. I understand. What else are you going to do, right? Except you don't understand how the market works and why it does what it does, and you don't understand market mechanics, but you got to start somewhere, right? So we all start in the same place. We all do the same thing, and we all lose in the beginning. So get used to it. The thing about that is, though, can you learn, or do you keep doing the same thing? I call that trader Groundhog Day. And the problem I think the biggest problem was we all have winning trades. And you're going to say, well, isn't that the goal? I'm going to say is for the right reasons, it's the goal. If you have winning trades, it's no different than gamblers have winning hands. They still lose, but what keeps them doing the same thing? Because they have winning hands. Well, traders who lose have winning trades. And that was me, and it's everybody else. So no big deal. You know, the big deal is trying to understand not only why your trades work, why they don't work. And if you don't have a statistical edge, trades are still going to work, except you're going to be a loser. And you will put yourself out of business eventually if you don't figure out what the issue is. And you can come to Trader Lab and figure that out, in my opinion. It doesn't mean you'll be a successful trader, because many retail traders are not willing to do what it takes to become proficient. And proficiency takes time. There's no shortcut, you know. And most traders, you know, hop from chat to chat, guru to guru, influencer to influencer, and they always end up in the same place. Doesn't mean if you come to Trader Lab, you won't end up in the same place. What it means is if you do the work, you actually have the opportunity for sustainability. And I'm going to say human nature is not to do the work because we have FOMO and we don't recognize FOMO. One of the things that I think really escapes us, at least it did for me, is I didn't understand the psychological impediments and why I couldn't get my arms around them. Willpower didn't solve the problem. You know, bailing out, skipping a trade, moving a stop when I shouldn't, or even just FOMOing in. I didn't understand it. You know, I thought, well, I'm not going to do that again. And I do it. You know, what the heck? So this is our RTH open. It's right here. Opening swing is going to be right here. Opening swing low, opening swing high, break low. This is called the variable high volume node. Now, this is extremely aggressive trading. These are, this is the most difficult place to trade. You have no structure other than the ETH. Now, the overnight volume point of control has a 81% probability. Well, if I have 81% probability here, and the ETH mid has a 68% probability, past performance not indicative of future results, and I know 67% probability to take out previous high or low, well, I got 67% probability to come here. All of this is suggesting go south, maybe. And why? FOMC, responsive selling. I'm getting out of here. All right. So this is called developing volume point of control. And I always want to emphasize, if of all the trades I've shared in Trader Lab, this is the last one that anybody should trade. I take more stops in this configuration. But it works for me. I take more stops because I'm trying to, with minimal information and participant behavior, I'm trying to take a position. So I'm very selective with this, and I'm definitely not mechanical. But if I'm anticipating selling today, all I'm doing is looking for shorts. That's me. I'm not saying that's a good plan, and I take stops, so we all have to get over it. So buyers are here, the green delta, all right, and we don't know, right? It's like, where are we going? I don't know. Might go to the ETH high. No clue. This is my first suggestion of too high. Now we're in here not even I think a second or two. Can't do anything with that. Now this is the retail price. So I have a little bit of volume up here. Now forget, this is the volume profile, and the volume profile is measuring the volume at price. So the fact that this is here is not the same as what's happening here. This was absorbed. There's an iceberg here, and I'm now below this. So the selling was here. These buyers were absorbed. So this is suggesting to me right here, my sellers are below my retail price. They're in here. And now I'm looking for a rotation to get short. And I have the following locations. I have this, and I will have this. So let's just see what it does. Resistance is here. And then, of course, I have the opening swing. So first thing is here. I'm going to throw a little line on here. Actually, let me put this in here for you. So I have the first location here, too high. By the time I blink, but it already gives me information that maybe, and I don't know. Now, the fact is we never know anything, but I don't yet have a test. So I wait for the test. It's just me. I'm not saying it's a good plan. In Trader Lab, you guys can come up with something better and show me, because that's why Trader Lab exists. You help me get better at this. So too high, break low. New retail price. Now, if I know that the volume, and I have my sellers underneath this level, and don't forget, I have a high probability of getting there, 81%-ish, and a 67% probability of getting there. And if I get in here, going through this whole thing. So it's shorts only at this time. There's my test. This is a short for me. Now, I don't sell it there because, again, I can't sell it there. When I get a trigger, now I'm going to show you a trigger. So this is my resistance. I got my sellers, I got my liquidity, and it's dark under here. I have statistical probabilities there and there, 67% here, 81 over there. So far, so good. Maybe. This is my short sets up here. This is my trigger, and now this is my resistance. So now risk neutral. Now resistance is going to be out here above this and above this. So for me, I'm not, and these are not recommendations. So forget, I got my first target, and now I have to watch the behavior here. Now this is the retail price or highest volume from the ETH. And don't forget what's below. Don't forget how this all set up. Let's come back. The ETH low was here, too low. So I know that I had my buyers here. So I know if I can't get up to this one, I have about over 98% probability-ish to get to one of them. Well, I have my sellers. Now, the next piece is the overnight volume point of control, which is here. This is the retail price. ETH low found too low. Now, what about this? Is this now too low and I'm going to go up? Or is it going to become too high and then I'm going to come inside? Question for this astute group of traders. So for me, I'm sitting here and the teeth start to chatter. So what do we know? What did we know? What do we know? You ask, what did we know? Where was the short? Didn't it, the structure set up here? And what is this? A test? It's another short, another scale. VPOC migration. I'm not paying that. Guys, this is language. So you can have all your indicators and everything. That's all fine if it works for you. For me, I learned to speak a foreign language. This is the language of the participant behavior. We are trading the behavior of the participants. So what happened up here? What do we know here? Sellers are here. There's your icebergs. Liquidity comes in. Watch the liquidity. Now, if you're not used to looking at a high-tier order flow tool like Bookmap, that's going to look very noisy to you. But this is really the tip of the spear. This is really where it's happening. It's there, and there's the press. So if I see the liquidity here coming down, it's like a hand that's pushing the market. Let's watch. See the liquidity. It's pushing. Yesterday's high, that's a target. And so all of these are shorts in the Trader Lab, okay? VPOC migration. What do we know? Too high. Retail price. What can it do? It can come out. It can do anything. It can come here and then continue or just keep going. But don't forget the premise. Responsive selling. FOMC tomorrow. I'm getting out of here, man. I'll send you a postcard. I'm not interested in this. Into the value area. What does that tell us? If we get in yesterday's value, then and remember, the longs have not received any deserved abuse. This is the retail price from yesterday's RTH, next target. And 98%-ish probability to take the ETH high low. So 67% probability in there, 98% probability there, and then this was the retail price that was too low. Well, if it's no longer too low, then what am I potentially going to do? Get under here, the stops. That's the primary trade. Now, there's other trades in here. I'm going to show them to you. And then we'll get into real time. You know, the thing about trading, guys, is that you don't have to have a lot of trades, right? You just need trades with edge. There are many days that I only take a few trades. And the reason is I take stops too. So if I take a stop, I'm going to lose a couple of points per contract. And okay, but how do I pay for my stops? I trade to targets that have probabilities since the market's random. And that's what I do. And the reason I do it is I can't predict anything. I used to be in the prediction business early on, you know, measured moves, Fibonacci, who knows? And Elliott wave, it's going to do this, it's going to do that. If you're thinking about what the market will do and you're predicting it, I'm going to suggest maybe you reevaluate that decision because we don't know what the market will do. We do know, if you understand market mechanics, where it might happen and also why it might happen, but we don't know if it will happen. So VPOC migration, let's keep doing this. And by the way, if you're in Trader Lab, guys, throw some questions up if you have them. Also, if you haven't given that, gone back in that time machine yet and put your arm around your newbie trader self and given that very important advice, be sure to put it in there for all of us. Variable high volume node, too high. I'm not paying that. Now, let's look at some structure. These are called distributions. And what all it is a consolidation. So let's not get hung up. But in the profile world, what it's telling us is this is too high and this was too low and we rotated in here. And the retail price was up here, right there. And if a price becomes too high in the store, you may not pay it. Some will, but if they find out it's too high, will then leave and go to a new auction or distribution. These are happening inside each other. Think of Matryoshka dolls, vertical integration of time. Too high. I'm not paying that. Leave it. Then we can go into these more microstructures. Like this right here is an auction. I'm not paying that. Yeah, but it's on sale. High volume. Let's look at this little node in here as we're just cruising around. So that's too high. This is too high. This is now an outside edge. This is called the low volume node. Once I break away from here and there's urgency, let me just show you what it looks like. This, I'm out of here. This is like getting in the car and going, oh, I'm not going to buy that store, forget it. Now, this price, too high. I leave. This urgency sets up a low volume outside edge. It's up here. If this is too high and I run away from it, now there's not much trade here and I move lower. This is my new retail price. This becomes an outside edge, and you'll see why this is important. And going south of the border. And you do remember over 90% probability to take the ETH high-low. Will you be holding for this? Possibly. And also you have a trade management process. And also you know the outside edge is here. And if I can't get back up here and regain this, this is now resistance. And if I get the same thing happening in here, this might become resistance. Watch the reaction to the liquidity. Liquidity comes in the book. This was the fair price from the RTH. This is our over 90% probability. If this now was too low, if I get below it, it sets up the potential continuation lower. Now I'm going to show you something called mean reversion, which is a primary trade, and it's at 75. Now, remember what we talked about up here, low volume. I'm not paying that. Now we're inside yesterday's range. We have traversed the value areas, and this was the retail price from yesterday. If I'm under here, south of the border, where are my stops, you ask? Under yesterday's low, right there. So 67% probability, I think it was, to take out either yesterday's high or low, right? I don't think yesterday, well, we got this. So now where's the stops? Where's the weak longs ahead of FOMC? Right here. So now we have to get short. So what do we know? Variable high volume node. So what I'm doing is I'm isolating distributions of volume or consolidations. They're really the same thing. And all a consolidation is an auction. What's too high, what's too low, what's fair. Now, the thing about fair in here is if fair is unfair, so they agree because the volume is here. But what is the market doing? It's going, what do we think about this price? No, that's too high. Well, let's check this one out. What do we think? I'm not going to pay that. Okay. What about here? You got to be kidding. We're out of here. And then the volume and the price are moving together. That is suggesting that these prices are too high. So I label them. This is an auction. I'm not paying that. I'm out of here. All right. Now what? I have my new retail price. The market has not counter-rotated. What else do we know? That as the market goes down, there's trailing stops behind the market. Kiloton, this is what I was asking you. The market goes up to go down and goes down to go up in all time frames. So where is the outside edge over here? If I know that's too high, 77, and I have my mid, I have my VWAP, but what's most important to me, since the auction for me is the primary element, not lines on a chart, I'm looking at the distribution of the volume. So for me, this is an outside edge. So if I know this is the retail price, now follow carefully, everyone. If this is the fair price and I come outside and I have stops where? Above the swings. And maybe this is too high. So if I get short in this area somewhere, my stop is going to need to be out here, because there's a lot of slop. So let's see. Or subject to your trigger. Now, remember, yesterday's low has a high probability and there's stops. Now, this is still open. And I have over 90% probability to take out the first hour's high or low. I don't know about you. I'm leaning here. What do you think? So I got this, and now I have this. This is going to be called mean reversion. It is the first trade traders ought to learn, because you would learn discipline at the same time. Now, where's the fuel? I always say, look left. It's right there. So for me, when I'm looking at this, I'm going, well, where's my stops? Well, of course, they're over this. But the mean reversion trade, it has to cross. And then it's outside in. So it's an outside in trade. So where's my location? 75. Now, if you can't get into this trade, then there's nothing to be thinking about. Where is the trigger? It is here. Here's the structure. Now, where's the high volume? It's out here. We also have another trade called VWAP to VPOC. So I have this, but my stop needs to be here. See? So if you got short there, you put your stop here, trouble. I never put my stop with everybody else. This is where the stops are in this swing. So another way to do this, which is the better way, is to get I call it a stop pick. So the stops are here and all the way up there. So this is my last outside swing. So if I come up into the stops and you see the icebergs, I want to be taking the other side of the trade. So you see how the icebergs sell into the stops? The stops, the delta, these are market orders. They are passive, they're limits, they need the aggressors. So the liquidity that the stops, that's us, provide, that's where I want to sell. I don't want to sell, even if I sell here, which could be a short for me, my stop cannot be there. And it won't be there. It's got to be out here. So if I'm waiting for VWAP to VPOC, then I don't have a trade unless it comes up to my trade. This is my trade. And then it's here, and then I'm going for the IB, which is at 930. So this is the IB. So this is the next target, and then yesterday's low. And for me, that's about it. For me, I know this is probably not very exciting for you guys, but I think it's pretty profitable. If you want excitement, I always say go to casinos, get entertained. But this is business. So how many trades do you need? If you took one trade today and you had it vetted and you anticipated it and the discipline to overcome your fear because of uncertainty, you would have a profitable trade. And that's all you need to do. If you get one trade, win or lose, whatever happens, that's your business. That's your plan. If you're chasing the market around, you have a problem because that's not going to be sustainable, in my opinion. You are going to have winning trades chasing the market around. This does not give me any information. This is a buy sweep. Now, if a buy sweep is up here, I use them differently. If a sell sweep is down here, I use them differently. But nada. So Zippo. Now, we have another trade here. And I think I spoke about it in TraderLab. Once this is gone, if I and we have an outside day, we have a trade called the IBF. And this is a counter trend trade subject to how you look at it. Let me show it to you. And this is not a recommendation. The IBF is a mean reversion trade. And actually, all it is you're trying to come back here and potentially squeeze out the shorts. And it only means counter rotation. I look at these. So let's try to sort out the conflict. Long liquidation. When we were watching this, and we were discussing this in TraderLab, it's not aggressive. So I was looking at this, and of course, I don't know. So it's not like I know, but I do see the difference, and I think you will too. The difference between aggressive selling and what looks more like long liquidation. Long liquidation, and if you notice, this thing was just sort of drifting down. I didn't see the Acapulco cliff dive. Did you? So if it's just drifting down, it gives me a sense, and this is just, and the word sense means it's a guess, but it's also a guess based on a lot of time watching the market. And this is not, where it's urgent. This looked like longs liquidating. It's a different behavior. And I can't define it for you except to say it's more from experience. And it doesn't mean we won't go lower and keep going down. Doesn't mean that. What it means is it might only be weak sellers, and then the shorts who are also counter trend in a higher time frame might get squeezed. So that sets up for me a counter trend trade, depending how you define trend, right? Higher time frame up, developing time frame down. Maybe it's just long liquidation coming back in the range. If this thing was doing the Acapulco cliff dive, there's a chance we would only test the range and keep going. Primary target was getting the stops out, and we were looking for the accumulation, the buying icebergs to take the other side of the stops, including us, to get long for this. Mean reversion from the other side. It's called the IBF. Now, subject to your skill as a developing trader, you might not take this trade, but this is reversion trading. But it's different in the sense that you're not trading a counter rotation in the developing daily time frame for continuation to take the stops out. You're now trading a counter rotation in potentially a higher time frame to get the shorts out. So we were getting short to take the longs out. And now we might be getting long at least to come back here. And then where's the stops? Where are the stops? VWAP and mid. So potentially the shorts, the mechanical retail traders, where's the last swing? Wasn't it 75? So where might this come? Not a recommendation. If I clear this, I can come there, low volume outside edge, and do one of these deals, or come out here. And this is important. So if we come out here, we can squeeze. So we'll see what this does. That's it for trades. Now, that doesn't mean that there aren't other trades you can develop. My objective in Trader Lab is to help traders understand how the market works, why it does what it does, and how you can build a trade plan to potentially get in alignment with it at times. And if you do the work and build a statistical edge, it's going to help you manage your fear. We're all fearful because of uncertainty. So we got to get over that, right? But how do you manage fear? If fear is part of the business, and it is fear, but we can redefine it, apprehension, because when you're trading, this is where you are. You are here. It's called the hard right edge. And what is there at the hard right edge? Uncertainty. In hindsight, very certain. Yeah, I shoulda. When you're saying I shoulda, the only shoulda that should exist in your vocabulary is shoulda followed your plan. Hindsight is really where Hyde, the lunatic, resides. You should have done this. You should have covered there. Right. Okay. Well, the plan was to get under here and cover because it looks like weak liquidation. And the other part of the plan is if we get long, is to come there. That's it. Now the market can keep going. We have another extended target out around 49 and a little bit below. It can still go there. These are viable targets and there's stops under 40. Are we going to get there? I'm asking you because I don't know. And your guess, and that's what it is as good as mine. So what I know is it's weak longs so far, and I don't see acceleration in the selling. If I got my fuel out, where's my new sellers? Why am I back in yesterday's range? If I can get back over here, I can squeeze here. That's all I know. So right now, if I took a long, this is what I got to clear. So we'll watch what it does. How you guys doing? You guys doing all right? How we doing in Trader Lab? You got some questions? Let me go take a peek. Thanks for your patience. And if you're in YouTube, I'm just looking here. I'm reading. Let's see. Okay, I don't see questions in Trader Lab. You guys seem to be doing okay. If you guys are visiting in YouTube after the fact, this stream is live in the Bookmap Discord Trader Lab community this week. If you want to watch it in real time, otherwise you can review these after the fact. But I can't answer your questions. So if you have questions and you're visiting in YouTube, come to the Trader Lab. There's no cost for it, and there's a link there in YouTube if you're inclined. The thing about trading, guys, is it's not plug and play and it's not mechanical. There's a lot of work, and the work is preparation and understanding. I found for me, I didn't learn trading from somebody. I learned over time that I had to correct my beliefs because they were completely out of alignment with what the business actually is. We're all the same that way. And I've been asking traders in Trader Lab if they could get back on a time machine and talk to their developing selves now that they've had some time in. What would their primary advice be? And I think about that for myself also. What it would be is you're in the gaming business, you're out in the plug and play, and there's over a 90% probability of failing in this business. First of all, why do traders fail? And are you doing what they do? Well, I didn't know I was doing what they do. But if I could talk to myself back then, I would have saved myself, I don't know, 10 years maybe or so, you know? And a little thing that's different about me is I started in the business 1980. So there was no internet, no PCs, none of this. So it was really different, and there was very little education. And what there was primarily books and seminars. And it's no different than you guys joining chat rooms today and paying, and you have no idea what you're getting and if it's even usable. So, because everybody has winning trades, that's the problem, right? And the problem for us is having winning trades. And I always think when I say that, you're going, how can that be a problem? Well, it's a problem if you don't have an edge, because gamblers have winning hands. So you'll keep doing the same thing, but you'll lose, and you'll put yourself out of business. And if you knew that might be the end result, would you keep doing it? I didn't know that I couldn't fix it and make it better, because I thought it was persistence, study, replays. And I'd see all these winning trades. So I kept doing it, maybe a little tuning, tweaking, right? So I just kept waking up in the same place. And the primary reason, I think, was I had too many inputs that were variable. And if you understand how games work in the casinos, they don't have variable inputs. It's absolutely anchored. Same game, same way. They control what they can, and the rest is all random. Same here. So why would we have random inputs? That's like the casinos changing blackjack depending on how they feel about it, or if they paid a gambler on the last hand. That's what we do. How's that sustainable? It's not. So if we have a proven business model, I suggest don't reinvent the wheel. Get in the track and ride a proven model, and then adapt structured trades to run in the track, and then develop your understanding of the obstacles, which are your fear and your primal wiring to avoid risk. If you can put those elements together and then work on them and be in a supportive community, no matter where it is, of reality, not fantasy. And I believe the Trader Lab is very unique. We have all different kinds of traders in there, as you guys know. and different. It doesn't even matter your methodology. The thing that's very important is to differentiate what you believe from what has an edge, because you will defend your beliefs, and if you have random winners, you're going to believe you're on the right track. That belief may be erroneous because it's not aligned with the business. It's aligned with Hyde, the lunatic, and it's aligned with randomness. Randomness exists 100% of the time in this business. Edge is the only answer to operating in randomness. So sit down with yourself and reflect, if you haven't, about the business you want to be in. And are you trying to fit this business into your beliefs, or you need to maybe adapt your beliefs to the business you want to be in? It's a question for you. Because I know most of us, or all of us, I would suspect, unless you've had really good guidance, have walked in the same shoes, down the same road. A little different winding here and there, but it's always the same. Tillerson, that is correct. Let me see if I can read some of your questions here. You know, they kind of scroll off in the chat. So I'm going to try to scroll back a little bit because let's just look here. Tapish, we're waiting for you to clue us in. Tapish is an NQ trader. And from what I've observed, does a very nice job. Chirac is asking me if the asset prices rise, does the market tend to move fewer points? No, volatility is volatility, and the market is going to rotate on itself because traders in all different time frames are using the outside edges or swings for their stops. So in this time frame, our little time frame, if you will, intraday, stops are going to be over these swings. The same reason stops were under yesterday's low. It's all the same. So the percentage or the price is not the issue. What it is the rotations. And we have high volatility, and part of that has to do with the price being high. We have higher volatility. Way back in the Stone Age, I remember trading the large S&Ps, not the minis, not the little ones here. And if we had like a 3 or 4.5 point move, it was euphoria. The Dow would move 30 points. It was a big day. If you can imagine that, mid 1980s. So when I traded those, just a sidebar, to get the range, I had a swing trade, 2-3 day swings. That was almost like day trading for me. Everything else I was doing was position trading, currencies, bonds, and the rest of that metals. So I traded across a lot of asset classes. That's why I ended up, I had to build a trading system. I couldn't deal with it. It was too much work. So to answer that question, I think as long as there's participants in the market, there's going to be volatility, and we need that as day traders. We want it. So I don't see any reason to think it'll ever be, I won't say ever, that it's going to be different until it is. And then there's other products. If the S&P ever compressed where there wasn't sufficient range for the risk reward, then go to a different product. It has more volatility, NQ or something like that, or whatever, crude oil, markets that have decent liquidity, because you got to be in a market that's liquid, or else you have a problem with risk management. You get skidded. Your stop's here, and they call you in a week and say, yeah, you got filled up here. VPOC migration. This says too high in the microstructure. However, we have to be conscious of that and that. So right now, other than the IBF, which is here, and if you took it on the pullback, it is there. You see how this works? This is mean reversion. and of course I have to say this, mean, because when you try to pick an outside edge, it's like picking the high of a day, and that's, none of us are any good. So it is really knowing where the trade might show up and the condition of the market and how the market works. Most retail traders define that by their indicators. Fine. But is it possible to define how the market works by the participant behavior and the nature or function of the market? The function of the market is to find a fair price, and to find a price that's too low and too high. We know 75 was too high, and we know at the moment this is too low until it isn't. I mean, if we break down and take it out, then, we're going to continue along our merry way. If we have exhausted the sellers and got the stops, the sellers, and now there's no selling under here, this is called mean reversion. Higher time frame is up, and let's remember the condition as a day trader. The market is short. What's above the market? Buy stops. Why did the market potentially come down here? Sell stops in this time frame. In the intraday developing time frame, what's above us? Buy stops. If I'm trading multiple time frames, which we are, then it'd be short down to here, long back to there. And if I get above here, where's my fuel? Out here, low volume node. This is the outside edge. So if you clear this, and then you clear that variable high volume node, I got a market. These are resistance points for me. And all they are reference points. And the reason they're useful for me is they tell a story. And the story can change. So don't forget that. This is trading. So what do I know? I know that's too high. It's a little off, but it's close. Yeah, close enough. VWAP is here. So this can come up here, out here. So this is what we're looking at. Out here, get the stops. This is too high. VWAP, we're going to get retail sellers here. And if we push through this, then we have outside edge and the stops are up here. So you got the mid, you got the VWAP, and if you clear this, you're looking out here. Doesn't mean it's a trade, just means it's a behavior. The longs are here to there. Now you'd be risk neutral and your teeth would be chattering. This is a structured trade. It's mean reversion, and you don't have to be doing anything with it unless you understand why you'd be thinking after the stops come out that if it's exhausted, that we would come here and then rotate. That's the trade. Now what happens past here? Assuming you took the trade in a structured fashion, which is here, and the entry is there, your scale is there. So this is a long structured trade, and now you put your helmet on and you get in your Barca lounger and you wait, if that's your plan. Because where does this fail? Well, it's going to fail under here and back under here. We had absorption here. We had absorption. See the stops coming out? That's what we were trading for. Into there. What's under here? Stops, stops, stops. They're out. Who uses the stops? The icebergs, you see? So maybe we're done. Maybe not. Not my job. What is my job is to look at the condition of the market, anticipate retail trader behavior. And you guys know this, but you really have to think differently. When you think like everybody else, that's a disadvantage in my opinion. So I think like a retail trader, but I also remember my experience as a retail trader and a developing trader way back was put my stop there. Why? Because that's the rotation. And there's stops there. Well, if I'm put my stop there, and there's stops there, and there's stops here, what do you think the possibility is of coming up here and taking these stops out? Do you think it's reasonable? Would I keep my stop there? Or would I use my understanding of the potential to get long and use those stops the same way I use these stops? You see what I'm saying? It's all the same. It's just different time frames. So for me, if I'm long and this is a structured trade, I'm going mean reversion, and then I'm looking for this. And if it doesn't get past here, which is always possible, I don't know, then I'd scratch the trade. I'm all right with that. But I don't know, Remember what this is. If this is too high, this is a new retail price, and if I can't get above here, I can keep going. If I come outside and I hold where the buyers were, I can come across. So that's this one trade. It's called the IBF. It's a structured trade. Not saying anybody, should do anything. What you ought to do is know where your trades might show up, have a plan, anticipate it, and also anticipate retail trader behavior. When I think of rotations, just me, since I've been picked off so many times, how you always say they picked my stop off? I have to say, you got to take responsibility for everything. Nobody's out to get you. You're getting yourself by the way you trade, your trade plan. You put your stops with everybody else, I'm going to suggest that might not be a good plan. And it doesn't mean we won't go down and make a new low here. That's not the point, because I can't tell. But I do know where the stops are. So if I'm getting long, I'm looking to go into the stops. If I don't get there, then I don't get there. I have no clue. Doesn't matter to me. It used to matter. I certainly cheer for the home team. You want the trade to work. But I find for me, getting risk neutral changes my emotional state. It allows me to become more detached, calms me down psychologically, and I'm still going to, chew on the end of the desk because I'm wired for that. But I already have alleviated my risk to a scratch. Then my broker sends me a gift basket. So that's really how this works. So if you get long, you scale, it's there, and now you're sitting here going, I don't know. Because that's what I'm doing. I don't know. I don't need to know because I can't. But what I know is the behavior, the trade, the locations, and the potential. Potential is here and maybe there, but here. Or fall out the bottom and then the trade's going to scratch. Does it make sense? Killaton rollover hasn't thrown a curveball to anybody. I don't understand why you have these beliefs. Rollover's thrown a curveball. What's that based on? When you make statements, don't guess. It's only facts, not guesses. The market is random. We cannot make excuses for our behavior and not trading when we have an edge. That's all I can tell you. Need to change. We all have to change our thinking. That's no different, Killaton, than saying they went after my stops. No, what that means, in my opinion, and it's just my own, and I'm talking about me, not you, but you and I are similar because you believe some things that I used to believe. I don't believe any of that anymore. I'm responsible. Nobody else. My stops go where everybody else's is. I'm going to get what the probabilities are of getting squeezed out because I'm thinking like a retail trader. And if I put my stop here, I'm acting like a retail trader. And it doesn't mean this time that it won't go straight down and do the Acapulco cliff dive. But my experience has taught me not to do what retail traders do because they do not sustain a career in this business. So I've learned from that. My thinking also, they went after my stop. Rollover is this. It's a full moon. Whatever it is, that's taking the responsibility and putting it outside of me. I refuse to do that because if I don't take responsibility, then who's responsible? That's all, something to think. And it's important about how you relate to what's happening. You can't do anything about what you don't control. You do control your thinking. So this trade, the IBF, would be risk neutral. It has to clear this to go higher. And you'll see that's our resistance. If it's too high, hasta la vista, trade scratches, and that's okay. Notice the behavior here. This is resistance. If this shifts down, it needs to clear this to get up into the stops. If it doesn't do it, then that's that. So this price at the moment is too high. We still have to watch down here and see what happens at this outside edge. This trade would be done at the moment, and then it's just hang out. So the buyers were here and the buyers were here. So what we want to find out is, and the stops are here and down here. So we want to watch this. It's interesting here. One of the ways to look at this is the IBF is here, okay? And you'd be, subject to how you enter this thing and what you do. You'd scale here. So we know that. The other thing we know is buyers are here and there's stops under here. Now I call this an inventory grab. And the reason is there's your stops coming out. And the other part of this is we know there were buyers absorbing here, and we know there are buyers there. If the market comes down and picks the stops, and I call this a stop pick, and there's more these buyers who thought this was a heck of a deal, I'll buy it. This liquidity comes in, I take the stops, and there's the buyers. Now we can squeeze. It's another way to trade this. And you have to isolate this. So depending where your stop is, and I can't tell you where to put your stop, I do know the range from here to here is the scale. I can also tell you, and again, not a recommendation, if I get picked off and I see the buyers, I put the trade back on again. Or my stop is further outside, either one. And now this is my resistance. Right? Variable high volume node. And now what? Let's come back here. Stops are where? There, outside edge. So now we're still looking, if you took this trade or you're still trading IBF for the rotation. Now, what do we know? Where's the stops? There. If you're short right now, let's discuss your emotional state. Generally speaking, how do you feel? Think like a retail trader. Don't act like one. What I know is if I get long and everybody is pretty much sitting short, I got my fuel out down here, then the possibility exists. If I can get above here is to start squeezing these guys out. So that is what I know. I don't need to know anything else because I can't know anything else. But I do know I had buyers there, and of course, buyers down here. I do know that the longs on the IBF, and it might be me or it might not, depending how I manage my trade, that the structure is here. See the structure? For the long, if I have my stop here, it is easy for it to get picked. So nobody went for your stop. That's the rationalization. They went for my stop. Nobody went for your stop. Your stop's in the wrong place. Because the way I think of this is, if I put my stop here, there's everybody else. There's 141. So me and a lot of other wonderful traders have our stop here because we're risk adverse. Well, I know that the buyers came for it here. They came for it there. And of course, they came for it there. I'd like to get further away. Just me. Because it's too easy for the market to come down into the liquidity. And the process I kind of think about is, again, these guys who bought here, if they're still in the market for S&Ps, they'll buy this. And then it's the same trade again. You see, and where is our resistance? Well, it's there, and it's there. Same place, right? There, you see? So for me to go up, I got to clear that. So you got to use a shoehorn in this thing. And maybe if it doesn't qualify, you don't have a trade. I mean, that's the other piece of this. But it's important that you learn the mechanics. So what I want you guys to think about is, first of all, the auction operates, it doesn't care about range. We need range for risk reward. The behavior is generic. In other words, it comes here because it's checking. If this is too low, it's going to come back and check. If this is still too high, we're going to come back. That's it. If we find too low, we're going to come back here. If this is too high, we may just keep going down. That's as deep as this gets. I mean, that's trading. It's maybe this, maybe that. Who knows? So let's watch the behavior here. So what do we know? We know the buyers were here. We know we picked off the weak guys, and the buyers are here. So what happens when we come back here? Are we going to get our buyers again? We know we have our sellers up here, and we know this is resistance. So you can kind of bracket this thing. Sellers are here. Buyers are here. So you kind of have your, you can kind of look at this. And we also know our buyers were here. Let's watch the behavior. And I can't tell you what it's going to do. It's not my job, so I can't. And nobody knows. So casinos don't know either what's going to happen when they deal the card. So I don't know. So I'm not in the business of knowing. I'm in the business of maybe. So maybe it'll do this. Maybe it'll do that. Maybe these buyers will come back in again and absorb the sellers. Maybe this is too high and these sellers are more motivated than these buyers. So, right? So what do I know? I know the stops are above here, and I know we have stops under here, and we got stops under here. That's what I know. So what do I know? I know right here we are auctioning, and right now this is too high. If I find my buyers again, I'm still looking for a squeeze. If I don't get my buyers and my sellers dump inventory on them, then we can continue lower. What else do you need to know? And how about this? What else can you know? So the possibility, now remember what the IBF is. It's a counter trend reversion trade. And the idea of the IBF is to come across and squeeze. That's the trade. So in your mind, counter trend to the developing daily time frame. Higher time frame is up. We know that. So counter trend, IBF. mean reversion outside, which we were doing our continuation trade. So when the market was going down and we had this open with the high probability and the stops, this made a lot of sense to 75, right? So that was a good trade, in my opinion. Very, very structured, very nice, because it had the elements. This trade, the long, is also very nice. It has the elements. What are the elements? Where's the fuel? It's the same concept of going for this is the same concept of going for all of this. Same concept. So now all we got to find out, of course, is the buyers. So who are the buyers in the market? There's going to be, these guys, but there's also the shorts become the buyers. So when you look at the market, I always think of the market from two sides. I'm always thinking about rotations in all time frames. And I do that because where my stop used to go and where your stop might still be going. I trade into your stops. Why? If you're short, you'll become a buyer. I want you to become a buyer because if you're a buyer, now I'm long and you're a buyer, what does that do for me? Carries my trade. If I get short here, then what? The buyers are there, right? Do I want to sell and join the stops that are here and here and now here? Me, not so much. I want to trade into them. That's the point of the IBF, to come across. I've only got a couple of minutes here, maybe 14. If you have questions in Trader Lab, let's go. So what do you guys think the market's going to do right now? Is it going to squeeze the shorts or is it going to continue lower? What is the evidence? Does the evidence suggest squeeze right now, or does the evidence suggest sell right now, right here, right now? What is the evidence and who's vulnerable? Why might the market come above here? Has to clear here. And then there's liquidity. We have two outside edges. We got this, we got that. So let's see what it does. Squeeze. Squeeze. So squeeze. Okay. Well, we'll find out, right? Where's our resistance? It's right here. What do we think might happen? Let's watch the order flow. So I have buy delta and I have icebergs. So they are selling into these buyers. That's what this tells us right now. Now we want to see what happens here. What happens with this algo here? Is this what do we got happening here? So, and this is noise, this stuff. You can't trade with this, but it is interesting to observe. Do we get stacking here? Do we get stacking here? Right now, there's more sitting up here. So we're just going to see what happens. These are not trade recommendations. Nobody knows what's going to happen. So nobody's responsible for predicting, because if you're predicting, you're going to be wrong. They're pulling. We got to watch now. Let's watch the behavior. Watch, see what's going on. Watch this. Watch the behavior and watch this. I still see selling, but lots of times what I observe in the market is the market needs to go up to go down. So if the market's going to go down, often what it'll do is go up to get inventory and then go down. If we're not able to go up, then not so good. But we'll see. This is still but we got to clear to come outside to get into these stops. If we can't clear this, remember, we're still looking at resistance here, right there. So we understand that. If you understand the auction, what it's saying is this might be too high. So this is our resistance. See where it is? And what's over these highs? Is this a strong high? No. This is, double tops. Remember you first learned trading? Oh, a double top. It's a wonderful thing. Let's sell it. Not so good. A double top is not necessary. It's an exhaustive structure. It is not a failure. Typically. I mean, it could be anything, but most of the time, when you have a double top, what does that mean? There's more stops in here. This is a triple. Triple tops are not strong. So even though we can go down, we could do anything, this is still, for me, a weak structure, and there's no way I can personally, and this is not a recommendation, I'm just talking about me. I'm not you. I don't trade like you. I'm in a whole different ball game as far as range, rotations, time frames, so we're all different that way. I can't get short. I'm what? Long, right? Why? Fuel. Probably sound like a broken record, right? Okay, now we want to see what happens now. So I got this liquidity sitting here. I've got an outside edge up here. So I want to, and I got my VWAP. So the thing is, if I start coming into the stops up here, and now we see the icebergs are, so let's watch the stops coming up. This is part of the plan, right? So the thing with this IBF, primary target is the reversion to the mean, and then potentially to squeeze. And the joy of this is we don't know where, except we know VWAP is here. And what do we know at VWAP? Potential selling. Subject to your plan, you might have an order ahead of the VWAP. And why might you do that? Well, we have a trade in TraderLab called VWAP to VPOC. That's one. But the other part, and I'm not saying that's an idea anybody, it's just part of your edge if that exists for you. For me, I'd be looking to take a profit ahead of this, and then the trade could be done or I'm trailing. That's subject to plan because it could go anywhere. Remember, we got two locations. We got this outside edge. I'm not paying that. Yeah, but it's retail. Oh, but it's on sale. Rotation. And if I get through this one, then I got mid. Liquidity just is getting added up there. Isn't that interesting? Full session VWAP, if you lean there, I think it is. Yeah, it is. And this outside edge. So remember, we sold the 75 on the way down for a reversion trade. This is a reversion trade called the IBF coming across. So the next place is potentially here. It's aligned. We have a VHVN. We have an LVN. So we have location, 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 real estate. This is the long reversion trade. You guys getting something out of this? How we doing? Yeah, Athen, this will be on YouTube later. Your Discord stream keeps freezing? Well, then you might want to just restart your Discord. Permit overnight VPOC and an overnight high. Scale at the IB high. Good luck with that. I mean, I hope that's viable as anything else in a random environment. And it's not that it can't happen. But from a structured point of view, in a time frame, this is the idea here for this. And then this trade could be done. It's just a matter of by your trade, I'm talking to the collective you, where's your trade? Why might the market come up? Now we have to be very conscious where the fuel is. We have here, and then this is really where the last short was up here, right? So the last short was this, and then the long is this, and then we're hanging out, right? And this is, remember, what's this? The stop pick. So that's all part of the game. I find that and it's always random, that it, like, for example, if you take this long, this is a structured long, to come up, or, there, and then you get the pick, it's actually better. And it doesn't mean it'll happen. That's part of the randomness. So if you get long over here, let's say, if your stop was there, you get taken out here. Notice the behavior. Look at the structure. This would set up an entry. Where does it come back? There. So too high. Structure is there. Trigger. So this sets up a trigger. This is your test. Here's another trigger. Here's a long entry. And now you're coming across, however it works for you. If you don't have the range, it doesn't qualify. You just get in your Barca lounger. This is the IBF though. It's a structured trade. Now, IBF is, as I always think of it, is a counter trend trade. So here we have some VWAPers. So you have to scale on this one ahead of this. So you have to see what it does. Remember, you put a trade on, you have trade management process. Whatever happens, happens. It's out of your hands now. Your plan is what you do. The outcome of this, no idea. Not important. DM trader, it's the IBF. You don't understand why I would not be running short? You can trade either side. Me, the long is strictly a counter trend trade. So no, I would not be short for this trade, but I would be using this trade, this counter trend trade, to potentially get short outside to revert this way. So I can trade from both sides or only one side. I could use this long to exit all shorts and then just look for shorts to come back here. So I'm trading the long is the same trade as from out here, but this is counter trend. This would be with the trend. And if it keeps pushing through, then I'm done. Does that make sense? Well, Doug, you can be short all day. That's your plan. For me, a different plan. So, but while you're short, I'm on the side and I'm generating MFE, and I'm trading into the stops the same reason I traded into these stops. It's the same in a different time frame. And then this is really kind of where I want to be looking at it. Not to sell it necessarily, but maybe if it was me. But my trade is to get long here to squeeze. So I trade both sides. I hope that answers your question. Different. Yeah, Doug. The primary target was down into this. So that trade was over because this is not an initiative in my mind. Anyway, guys, if you're visiting in YouTube after the fact, use the link down there if you want to visit Trader Lab. There's no cost for it. You just have to confirm your Discord. These streams are being done live in the Discord Trader Lab at 10:30 Central Time. And YouTube is posted after the fact. Hope you got something from today. This is based on the business of trading. The Trader Lab's a community of like-minded traders who've come together to leverage their collective experience. It is about the understanding how the market works, why it does what it does, and how you can build a plan with a statistical edge, which is actually what the business of trading is. If you're visiting in YouTube after the fact, please give a like, give a thumb up, and use that link to visit the Trader Lab. Thanks again, guys. Appreciate your time and interest, and thanks for visiting the Trader Lab today.